Welcome to our webinar this afternoon, which, as the title clearly shows, is all about tax-free benefits. The webinar is scheduled to run for about 45 minutes. We're hopefully going to have time at the end for any questions that you might have. So please use the Q&A tool on the Zoom toolbar to put any questions forward, and we'll try and answer as many of those as we can before we finish. I'm delighted to be joined today by Simone Smith, the tax manager here at Rotherham Taylor. Simone's going to take us through the presentation and hopefully answer any questions that you might have. We are recording this webinar as well, so we'll make a on-demand version available on the website and through our social media channels if you need to recap on any of the points covered. So at this point, I'm going to hand over to Simone. Over to you.
Thanks, Jo. Hi, everyone. Welcome to our webinar. We're going to be talking about some tax-free benefits today. I'm not going to run through every tax-free benefits. These are a good selection of my favourite ones and maybe a few that you've not heard of before but can be quite useful to know about. So I'll tell you about who we are first. So, as Jo said, my name's Simone Smith. I'm the tax manager at Rotherham Taylor Chartered Accountants. We are a firm of chartered accountants and tax advisors based on the docks in Preston in the Northwest. We really do believe that our clients deserve an accountancy and advisory solution that works best for them. And that's why we tailor our service to the specific needs of our clients. We are, by definition, an accountancy practice, so we do all the day-to-day stuff that a normal accountancy firm would offer, but we do have quite a lot of specialisms if you need that bespoke service that perhaps your current accountant can't offer. One of those little advisory things we've done is we've put together a tax-free benefits checklist. There are a variety of different benefits that both directors and employees can receive. Do you know about all of them? I'd strongly recommend that maybe you jump on our website or drop me an email so you can have a look at the checklist, even if it's just something that you do in-house to make sure that you've considered everything. We do use tax-free benefits as part of an efficient tax planning strategy. And they can also be used as an extra motivator for your staff within your business. And they do help to retain and attract the best talent, perhaps without costing you as much money as something like a standard salary increase might do. Do make sure you're making the most of them. And if you do want the checklist, just drop me a line at the end of the webinar and I can send that over to you. So we'll run through some of the tax-free benefits now. These aren't in a particular order, just gone crazy and mixed them up. So let's see what we come across. The first one, I'm sure that you all have Christmas parties, but there are many more things available when it comes to social functions and parties. But there are 3 key rules that you need to follow. So to be exempt, the party or social function has to be open to all of your employees. That doesn't mean that everybody has to go, but they do need to be invited. It needs to be annual. That's not to say that it has to be a Christmas party. It could perhaps be a summer barbecue or maybe an Easter function. It just needs to be held around roughly the same time every year. And it needs to cost £150 or less per person. So there's no rule saying that you can only have one annual function. You can have as many as you like, but the cost does need to be £150 or less across the year. So this is probably a good time to mention that when we talk about things like these allowances or costs and it being per year, we are referring to the tax year, not the business accounting year. So just for clarity, the tax year runs from the 6th of April to the following 5th of April. So at the moment, we're in the 2021 to 22 tax year, and that runs from the 6th of April 2021 to the 5th of April 2022. So in terms of social functions and parties, it doesn't have to be in person, especially with everything that's going on with COVID. You may not want to be holding in-person functions. So it does apply to online or virtual parties if you think a Zoom party might be the way for your business this year. In terms of inviting all of your employees, if you've got more than one location, an annual event that's open to all of your staff in that location could still count as exempt. And you can put on separate parties for different departments. I think the rule behind all of this really is just that everybody needs to be invited to some form of annual event, and then they can decide whether they want to come or not. As I said, the combined cost of the event can't be more than £150 per head. And it's really important to remember in terms of this tax exempt benefit that it's an exemption, not an allowance. And this actually happened to a client of mine where they spent a few pence too much, and that meant that they lost the exemption entirely. So say, for example, if your cost per head is £200, you can't just claim £150 of the exemption. You would literally need to spend below £150 per person. So what more permission do you need than to go out and have a few parties or a few get-togethers a few times a year? It is tax exempt and it's tax deductible for the business, and it's a great morale booster. So our next one, healthcare. Now, when most people think about healthcare, they tend to think about medical insurance or a dental plan, which many of you will know isn't a tax exempt benefit. It does go on a P11D form and your employees pay the relevant amount of tax on it. And then as an employer, you pay national insurance on top of that as well. But there are certain elements of healthcare that are tax exempt. So these can be good little add-ons for your employees. So we'll run through them all. You're entitled to one periodic medical check or health screening a year. Eye tests are exempt, but only to the extent that they are for people that use a computer monitor or an other screen regularly. And that links into glasses or contact lenses being exempt if they're provided for monitor or screen work. So if your employee was to present you with a receipt for a prescription for glasses, you would be looking for it to say VDU use. If they are only VDU glasses, then you're fine to pay for them. But if it's more of a general prescription for a deterioration in general eyesight, that wouldn't be covered by the exemption. If you need to send an employee overseas to work, medical treatment outside the UK is exempt, but you need to have committed in advance to pay for it, unless you're actually paying the provider of that medical treatment directly. And then the final one, medical treatment to help an employee return to work is exempt up to £500. However, the employee does need to have been assessed by a healthcare professional as being unfit for work because of an injury or ill health for at least 4 weeks. And they do need to have been absent from work because of that. So a few little ones there that you might be interested in offering your employees or your directors. The next one that we'll look at, counselling, is quite an apt one, I suppose, for the situation where we find ourselves in with COVID at the minute. A lot of employees, now that we've been going through COVID for about 18 months, are struggling with stress, anxiety, burnout. So this could be something worthwhile to provide to them, especially if they need help returning to work. So the counselling service must be available to all employees, and it's for welfare issues. So we're thinking things like bereavement, ill health or stress, problems at work, abuse or personal relationship difficulties. Unfortunately, the counselling service can't offer things like tax advice, legal advice, financial advice. However, debt problems could be covered by this counselling exemption. It can't relate to advice related into leisure or recreation or medical treatment. However, again, counselling services such as CBT may be covered by the exemption. Another thing to mention is if you provide counselling as part of the salary sacrifice arrangement, it's not exempt. And a salary sacrifice arrangement is effectively where an employee gives up part of their salary for you to pay for whatever it is. So in this example, it's counselling. In that sort of situation, the employee is sort of technically paying for it themselves because they're giving up an equivalent amount of salary. So the exemption wouldn't apply. A little one that we probably all take for granted, car parking. So a parking space can be provided at or near the place of work. There's no tax or national insurance to pay because it is exempt. And a car parking space for a business journey is also exempt. So if maybe you've got staff members that need to visit client sites, however, they may still need to be reported to HMRC as an expense that's been reimbursed or paid for the employee. So that's just maybe something to check with your own advisor, but there shouldn't be any tax or national insurance to pay on it. The next one, business travel in a personal vehicle. I think all of us know the basics about this, but there are a few little bits that maybe not everybody's claiming for. So you're allowed to pay your employees a certain amount of MAPs each year. So that's your mileage allowance payment. And HMRC have got set rates where if you pay up to these figures, you don't need to report them. And these are known as the approved amounts. So this is the table that's actually come from HMRC's website. So again, these are per tax year, not per business year. The rates are higher for the first 10,000 miles. So the current rate for a car, which is what most people use, is 45 pence. And then once you get to 10,000 miles, the rate drops to 25 pence. It's worth mentioning that you don't have to pay these full amounts. If you wanted, you could pay a lower rate than 45 pence. What would then happen is your employee could claim the tax on the difference directly from HMRC. So if you paid 20 pence per business mile for every mile an employee does in their own vehicle, then they could claim the difference back from HMRC. So they would have been underpaid by you effectively by 25 pence a mile, and they would claim the tax back on that, not the actual mileage. So from the employee's perspective, I'm sure they would rather actually get paid for the mileage, but it's not necessarily a bad thing if you pay them under these rates, because by claiming the tax back, it just means that they're effectively sort of paying it without having the penalty of paying tax and then paying for fuel and lots of things out of their own money. If your employee carries another employee in their vehicle, so maybe you've got 2 employees going out to a client site in one car, then you can claim, you can pay that employee what's called a passenger payment. So you can give them up to an extra 5 pence per mile tax-free. That's the bit that not many people know about. And if you've got employees that are doing substantial mileage, you know, it can really add up over the course of a year. The same again, if you don't pay that rate or you pay a lower rate, then your employee can claim the tax back from HMRC. So perhaps if you don't pay mileage, maybe you want to mention to your employees that they can claim the tax back. It's just a nice thing for you to do as an employer to help them recoup some of their costs. Linked to travel, so we'll move from business travel to general travel. These probably aren't seen by most businesses, but there could be occasions where they might be useful for your business. So you'll be exempt from reporting anything to HMRC and paying tax and national insurance if the cost is for one of these things. So a works bus service, an employee with a disability, but only in certain circumstances. So that is something you need to look at before you commit to paying for anything. I've personally been affected by the next one, so a taxi home after occasional or irregular late night working. So as an example, I used to work in a call centre a very, very long time ago. And but they would be open for things like children in need phone-ins when you would work much later than normal. So they would put taxis on to take all the employees home, because the call centre was in a city centre where most people relied on public transport rather than driving into the building. Similarly, a taxi home if a car sharing system's temporarily unavailable. Bicycles or cycle safety equipment, but we'll talk about that in more detail a little bit further on. And travelling to work because public transport has been disrupted by industrial action. Moving on to the next one. Working from home. This is another big one at the minute because of COVID. So if you cover the costs of additional household expenses for an employee who works from home, you don't have to report or pay anything if all of the following apply. So the employee needs to work from home. So if they choose to work from home, generally you can't claim these allowances. They need to work from home. So in terms of COVID, when the government have specifically either put us in lockdown or they've said if you can work from home, you should work from home, this is the sort of situation that's referring to. Other reasons they need to work from home could be because equipment they need is not available at your workplace, or they live too far away from your workplace to travel there every day. Also, the amount you give them can't be more than the additional household expenses, and the amount you give them isn't more than the current weekly limit. So another table straight from HMRC's website, these are the current weekly limits. They were increased quite recently, actually. I don't know whether it was deliberately because of COVID or if I think we were just due an update, to be honest. And the amount that you can pay free of tax and national insurance is £6 a week. If you pay an employee monthly, it's £26. It does seem like a higher amount, but it's just because the amount is actually like a weekly figure. So to get to the monthly figure, you times by 52 and divide by 12. Sometimes it comes out a bit of an obscure number, like when we look back to when the weekly allowance was £4 a week. So HMRC do tend to round things up to the nearest pound in favour of the taxpayer. In terms of home working, there's nothing that says you have to pay this to your employees. It is a nice thing to do because it's a tax deductible expense for your business. I mean, from an employer's perspective, you may find that your premises running costs aren't necessarily lower if you've got employees working from home. So for example, in our own business, we have employees working from home now because of COVID. Our electricity and energy costs in the office probably aren't reduced that much because all the desktop PCs are still turned on because people are accessing them from home, and we do still have people in the office all the time. So you may decide that you don't actually want to pay your employees these amounts, but again, a good employer thing to do could be to let your employees know that even though you're not paying these allowances, they can claim the tax back on them from HMRC. So they wouldn't have the benefit of receiving the full weekly amounts, but at least they would get the tax back, which could be like a little win-win situation for both of you. Keeping in terms of extra costs incurred, so this is one that I quite like that no one's really heard of before, and it's called incidental overnight expenses. So these are personal expenses that you would incur as an employee if you're away travelling overnight on business. So for example, if you're a repair engineer and you have to drive a significant distance from your base and stay at a hotel overnight, or if you're say a consultant or a professional that goes to visit a client quite far away from the office and you stay overnight. These exemptions are designed to cover your extra personal cost from staying away from home. So it includes things like buying newspapers, paying for laundry, phoning home. It almost feels like an out-of-date exemption, because these days, none of us, if we're staying away with work for a night, will pop out to buy a newspaper or nip to the laundrette, or use a payphone to telephone home. You know, these sorts of expenses probably don't actually cost us any more money than they normally would do anymore. But the exemption's still available and I still love it. It's still one of the best ones out there. So if you stay away in the UK, it's £5 a night. And if you travel and stay outside of the UK, it's £10 a night. So it really can add up. I suppose the only thing to really mention is that you do need to be staying away for work. So if you go to see a client and it would be completely reasonable for you to travel home after that visit, but perhaps you've travelled to London and you decide that you're going to stay for the night because the next day you're going to go and see the sights. That's not really a work trip. So in that situation, I'd probably advise that you don't claim for these exemptions. We're going to move on to my ultimate favourite now. I absolutely love this exemption. Trivial benefits. It's one of the newer ones. It's maybe been around for 2 or 3 years now. And it's not a cash-based exemption, but it's still really my favourite. I just can't talk about it enough. So you don't have to pay tax on a benefit for your employee or directors, so it does apply to everybody in the business, if all of the following apply. So it has to cost £50 or less to provide. It can't be cash or a cash voucher. So you do need to be careful if a voucher is either exchangeable for cash or if any balance that's left on the card can be given to you in cash if you make a purchase. It can't be a reward for work or performance. So you can't give it to someone and say, that's for a job well done. And it can't be in the terms of your contract. So it can't be something that you are contractually entitled to. These are so amazing that, of course, there had to be a cap on them for directors, because if you are in charge of your own business, why wouldn't you just give yourself a load of £50 vouchers throughout the year? So directors of closed companies can't receive trivial benefits worth more than £300 in a tax year. And just to clarify, a closed company is a limited company that's run by 5 or fewer shareholders. So this is more for maybe family companies, small businesses that are both run and managed by the same people. But even HMRC's examples of trivial benefits are absolutely amazing. So the big example they give on their website is that you could give all of your employees a turkey at Christmas. Totally tax deductible for your business and tax-free for your employees. Some other big examples of this I've seen are Easter eggs at Easter, hampers at Christmas, flowers on birthdays. And what a lot of company directors do is at the start of the tax year, they will go out and buy a load of £50 vouchers. So if say you're a company that doesn't have employees, you've only got yourself or maybe one other person as directors and you're the people doing all the work. They go out at the start of the tax year in April, buy 6 £50 vouchers, so that's your £300 for the tax year, and then just find random reasons to give themselves the vouchers throughout the year. So, oh, John, it's a lovely sunny Friday in July. Here's a £50 voucher, go out and have a great weekend. The reason that I love these so much is just because they're so versatile. So, for example, when I got married to my husband, he runs a company with his friend and they're both directors. So I text them, it's like, are we getting a trivial benefit? It's our wedding. That's a great reason for a trivial benefit. And lo and behold, I'm now the owner of a Vax steam cleaner from Amazon, because Amazon produce vouchers. So it really is my favourite one. If you're going to take anything away from this webinar today, get some trivial benefits. It can literally be anything, and it's such a great way to extract money from your company tax efficiently, and also to make your employees happy. And who wouldn't want to do that? Speaking of employees, employee meals. Probably not something that we come across very often these days, but you don't have to report anything to HMRC or pay tax and national insurance if you offer all of your employees either free or subsidised meals of a reasonable value, of course, at a workplace canteen, or vouchers that cover the costs of buying those meals. So the reason I said is we don't really see this a lot these days is because not many of us work in companies that have a canteen anymore. But if you are in one of those businesses, it's still something to think about. As with most things, if you offer this under a salary sacrifice or a flexible remuneration agreement, it's not exempt. My next one is probably my second favourite after trivial benefits, mobile phones. So you don't have to report anything to HMRC or deduct and pay tax and national insurance if both of the following apply. So you provide your employee or director with one mobile phone or SIM card, and the phone contract is between you as the employer and the supplier. So the way that I always explain this to people is that the mobile phone contract has to be in the employer's name, and it has to be paid from the employer's bank account. A lot of places people go wrong with this is either they've got a personal contract that they then just move the direct debit to come from the business account, or they do it the other way around. There's a contract in the business name, but it's coming out of your personal bank account. The reason those don't work is because they don't fall exactly within this exemption. So what you could find is that the cost of the basic telephone line itself isn't covered by the exemption, and then you were only tax exempt for the cost of business use above the normal package price, which in this day and age, most of us are just paying a basic amount every month, and it's got free internet, free minutes and free text. So generally speaking, there isn't any additional business cost. So you might think you're going into this with a great tax exempt benefit, and then you end up paying tax and national insurance on all of it. So always remember, everything's in the company name and the company's paying for it, or your business if you're not a company. The exemption itself covers the cost of the phone, any line rental, and the best bit is it actually covers the cost of your private use of the phone. So you might only use it minimally for business, but as long as it's in the company name and paid from a company bank account, you can have a phone. The only downside, I suppose, is you can only have one. So if you're a small company, perhaps where it's just one director running it, you can't give phones to your spouse or your family unless they are also employees or directors. The next one is bicycles, which went through a stage before COVID where it's actually quite popular. Obviously with COVID now, most of us are at home or have been at home for quite long periods of time, so it's not been as popular this year. But lending or hiring bicycles to employees doesn't count as an expense or a benefit as long as they're available to all employees and mainly used for getting to work. So as with most of the other benefits, it just needs to be available to everyone. Not everyone actually has to take it up, but you can't offer a bicycle to, say, the management team, but not the floor staff. Mainly used for getting to work, as long as you're actually using it to go to work sometimes, then generally you're all right. Your issue is if you get a company bicycle and you live 50 miles away from the office, HMRC are more likely to ask when you've travelled to work on the bike, rather than say if you live 3 miles down the road. But you do need to make sure you actually cycle there at some point. The exemption doesn't just cover the bicycle, it also covers the safety equipment. So that includes helmets, bells, lights. Child safety seats are covered, and also reflective clothing. But there are specific items that HMRC list as not considered as safety equipment. Those include a computer cycle, so thinking things like sat-nav, waterproof clothing that isn't reflective, and training for bicycles. The downside for COVID, because we have all been working from home, HMRC have said that only employees who were part of a cycle scheme before the 20th of December 2020 are exempt from what's called the qualifying journey condition, and that's up to the 5th of April 2022, when hopefully all the COVID restrictions will have calmed down. However, they might extend that date if we do end up in another lockdown or with more working from home requirements. The reason they've brought this in is because if you get a bicycle now and you are working from home, the chances are you aren't using that bicycle mainly for getting to work. So they've paused that for people who already had a bike, but you can't get a new bike really at the minute. Employers do sometimes choose not to just provide a bicycle outright. They can provide it in conjunction with a salary sacrifice arrangement. So either the employee can give up the full cost of the bike, maybe over a number of months or a number of years, from the salary, or maybe the employer will just ask for a contribution towards the bike. There are quite a lot of schemes out there, but this is one of the few benefits where if a salary sacrifice arrangement is in place, it doesn't necessarily mean that the bicycle exemption isn't available. Move on to one that's a little less known about now, so suggestion schemes. So these are designed for suggestions that save your business money. As with many of the other ones, the scheme must be open to all employees or to an entire group of employees. So everyone in a particular office, maybe everyone at a certain level within the business. But the suggestion must be about your business. And it's got to be likely that the employee would not have made the suggestion as part of their normal work. So if you have, say, a team that's specifically working on new ideas for the business, maybe they're going to be less likely to qualify for a suggestion scheme payment. And this might seem a bit obvious, but the suggestion can't be made at a meeting that's specifically for proposing suggestions, because obviously you're going to sit there and think about suggestions before you got to that type of meeting. There's two kinds of award. There's the encouragement award and the financial benefit award. So the encouragement award is just for good suggestions, to reward your employees for a special effort, and that's exempt up to £25. The financial benefit award is the big one. So for suggestions that will save or make your business money, you can make a payment that's exempt up to £5,000, but you are capped at how much you can give. So it'll either be 50% of the money you expect to make or save your business the year after you put the suggestion into action, or 10% of the money you expect to make or save your business in the first 5 years that you put the suggestion into action. So as you can see, it's quite complex. Not many people operate suggestion schemes, but if you're in a business perhaps where there are ways that you could save or make money, it's something to consider. It'll definitely make your employees more likely to suggest something if there's up to £5,000 on the table. I suppose it depends how much really you want to save or make money. Many of us have heard of the next one, but in terms more, I suppose, of people that are retiring and get a gold watch or a clock for the mantelpiece. So a long service award, you don't have to report a non-cash award, so it does need to be an actual gift rather than just a cash payment. If all of the following apply. So obviously it is called a long service award for a reason. So the employee needs to have worked for you for at least 20 years. The award's got to be worth less than £50 for each year of service. And you can't have given this employee a long service award in the last 10 years. So really, it is for those employees that have been with you for a long time, which is why we tend to see it more on retirement. So as an example, you could give a non-cash award with a value of up to £1,000 for 20 years service, which is why we tend to see things like gold watches and clocks. So these have been just a few of the big ones that I think will matter most to everybody. As I said, there are more, and surprisingly, HMRC's website is actually quite good when it comes to expenses and benefits. Even if you were just to Google HMRC expenses and benefits, it will take you to the page, and it is set out in a nice long list. So if you're looking for something specific, it will take you to the page that tells you what's exempt, what isn't, and what you would need to report to them. But as I said, if you take anything away from today, trivial benefits all the way. It's definitely the way forward. If you would like any more help from us, we have helped many different businesses to effectively claim tax reliefs and use tax allowances to minimise the amount of tax that they pay. A lot of people and accountants always think of the big things like company pension contributions, but often you'll find that a lot of the little things soon add up to make a big difference. So if you add up some of these tax exempt benefits like trivial benefits, mobile telephones, travel, the overnight allowance, you'll soon find that they make a big difference. So if you would like some help putting together some sort of tax planning for your business, or for us to take a look at ways that you could save your business money or reduce your tax bill, you can either give us a call or you can email into the office. If you'd like to get in touch with me directly, my email address is simone@rtaccountants.co.uk, or you can contact me at the office and I'll be happy to help or answer any questions that you've got. Maybe if you just want a little bit more information about one of the benefits that I've talked about, or something you've heard about that I've not covered, drop me an email and I'll get back to you. But that's all the benefits that I want to run through today. If you've got any questions, please pop them in the Q&A box and I'll be happy to run through a few of those before we go. I don't think we've got any questions at the moment, so I'm going to assume that I've chatted to you great and you've enjoyed all the information that I've given you today. For the third time, take away trivial benefits. It's the best thing in the world, in the tax world anyway. But otherwise, I'll look forward to seeing you all on our next webinar.